What's up guys, you're welcome to my channel once again. So in this video I'll be showing you a very high win rate Heikin-Ashi trading strategy you've never seen on the internet before. Believe me, this is a very high probability setup and you hardly find content like this on the internet. It's going to surprise you and it's going to change your trading career forever and ever. My name is Isaac. In case you're new to my channel, please consider subscribing before leaving. So alongside this Heikin-Ashi trading strategy, we'll be using a couple of indicators such as the relative strength index, which is RXI, and also exponential moving average. We'll also be using alongside those two indicators such as we'll also be using volume indicator. So for some of you that don't know what Heikin-Ashi trading is, Heikin-Ashi technical is basically a technical indicators that smooth price and give a clear vision of the price action. Let me just say it helps in the noise reduction and shows us more visible trend and channels, you understand? So basically Heikin-Ashi gives us a better entry signals, and it was developed by Munihisa Hama in Japan in the year 1700, and the Heikin means average while the Ashi means bar, you understand? So basically one of the let me just say the four rules will be taking note of before entering a trade or either a sell or a buy signal. The four rules will be taking note is you have to wait for the price. Let me just pull up the indicators real quick. So you just have to go here and type relative strength index. So let's just pull out that indicator real quick. The indicator is already out, and then the second indicator is moving average exponential. You have to pull it out, and then the last indicator is volume indicator. So volume, you just have to pull it up real quick. So after that, as you can see, we already have RXI, volume indicator, and also one exponential moving average. To bring out the second exponential moving average, you just have to go back and click it or type it here. Better still, you can search it here. Okay, so I'll be showing you the settings real quick. Okay, so for this 9 exponential moving average, let's just change it to yellow. Let's make it thicker, and then we'll be changing this 9 to 50. As you can see, we have a 50 exponential moving average on the chart already, and the next thing we'll be doing is editing this 9 exponential moving average, changing the color to white and then making it bold. We'll be leaving the 9, which is the length there, will be leaving the 9 the way it is. So as you can see, our exponential moving average is fully set up, and then the volume indicator, you have nothing to set there. Likewise to the RXI, you have to leave it the way it is. Now for you to go long, some of the rules you have to take note of is by when the price is above the 50 and 9 exponential moving average, you should be looking for a buy or a long opportunities, you understand? But when the price is below 50 or below 90 9 exponential moving average, what you should be looking for is a sell or short opportunities, short signals, you understand? Always trade in the direction of the trend. Don't trade against the trend, you get me? So that's it. And in case you haven't subscribed to my channel, please subscribe to my channel before leaving, and also like this video if you haven't. So your profit target should always be either 1 to 5 risks to reward ratio or 2.5 risks to reward ratio, you understand? So this high probability setup, let's just go now. Always wait for the candle to close above the 50 and 9 exponential moving average. That is what we did here. We waited for the candle to close above it and we went long. The candle closed. You also have to wait for the bullish candle to close above 9 and 50 exponential moving average, and the wick should appear at the top of the candle, not below. A bearish candle has a wick below, and you always have to avoid any candle that is having wick above and also wick below. That's an indecision Heikin-Ashi candle, and it's mostly appears in a consolidation period. So after you've waited for the price to be above 50 and 9 exponential moving average, you also have to take note of the RXI, which is crossing upward. Also take note of the volume, which is increasing, because the moment the price is moving above the 50 and 9 exponential moving average, will be having the volume increasing there. As you can see, volume increase. Always wait to support your entry signal with a volume increase, and also a crossover of the RXI here, and also a crossover of the 9 and 50 exponential moving average. As you can see, the crossover was about happening before we went long, and which turned out to be a successful trade. And also, if you want to go short, I don't intend making this video lengthy, so I'm going to rush it. If you want to go short, the moment the price is closing few candles below the 50 and 9 exponential moving average, and also having a wick below the candle, not above the candle, you should be looking for a short position. And as you can see, we went long by the time the candle closed below 9 exponential and also 50 exponential moving average, with a volume support. As you can see, the volume was increasing drastically with the volume support. And also wait for the RXI to cross below, you understand, to cross below the SMA line and moving downward to the oversold region before entering the short trade. And as you can see, our 2.5 risk to reward ratio turned out to be a successful trade. So with this strategy, you can easily be making at least $1,000 weekly. I know what I'm saying. It can even happen daily, but you have to manage your risks. You understand? One of the most important things we traders should look out for is managing our capital. Manage your risk level. You understand? Taking unnecessary and excessive risks isn't going to do you any good. You have to take calculated risks. And as you can see, this strategy I've shown you has a high win rate of 70 to 80% of the time. You hardly see content like this on the internet. All what you see is hey, blah blah that. And as you can see, let's just confirm it once again. The price was below the 9 exponential moving average, and also below 50 exponential moving average. That's a short position we're looking for. And it's, as you notice, the price was consolidating here, so the volume was low. And after the consolidation, we saw a hike in the volume. We waited, and RSI was crossing. We also waited. We're waiting for a signal, an entry, high probability entering signal. So the moment we got that entering signal at this candle, which closed below the 9 and 50 exponential moving average, by that time the RSI have crossed to the bottom a little bit, and we're having a high volume. So we went into the trade, and as you can see, the risk to reward ratio was 2.5, and the trade turned out to be a successful trade. So that's how you can make money on the daily basis trading, even in the bear market or in the bull market. So my name is Isaac once again. In case you're new to my channel, don't forget to subscribe to this channel before leaving. As always, peace out, stay safe.